Hi, everyone. It's great to have you today in our closing panel. Actually, you have to stay longer. Apparently, after that, there is a little surprise. So please don't leave after our panel or during after panel. Thanks to our guests that they're taking part in this panel, and I would like to pass them word and let them introduce themselves. Evan?
Yeah, Evan Yang, Group President, Animoca Brands. We are a diversified Web3 investor operator. Seb, who was just on the panel, Sandbox are our subsidiaries. We have also Mochaverse, Open Campus, and 600 investments.
Thank you.
Thank you, Ivan. Hey guys, I'm Barami Rai. You can call me B. I'm the CEO at DTC Group. We're a Web3 venture ecosystem based in Thailand. So we do full incubation, acceleration, and we also co-build projects in the Web3 landscape. We also do investments, and we do host events like Thailand Blockchain Week, Dubai Blockchain Week, just like WOW Summit. So very excited to be in this panel today and to have an amazing conversation with everyone. Thank you.
Hi, everyone. I am Charu, Senior Ambassador Polkadot and President of Unique Network. Unique Network is the advanced NFTs and digital assets infrastructure for gaming, for tokenization and engagement. Very pleased to be here.
Hello, everyone. My name is Laura Cornelia Inamedinova. I'm Chief Ecosystem Officer at Gate and Principal at Gate Ventures. And I focus on finding interesting projects early stage that we invest in and later empower. And super happy to be here that we finally have a panel where it's a good balance of men and women.
Thank you for noticing it. It's actually my target as well, because the industry is full of male names, but there are not many female names, and I'm trying to push myself to speak as well. So yeah, thanks for everyone. And myself, Елизавета Першина. I'm based in Hong Kong, and I'm a partner at Ubicon VC. It's a venture studio in Hong Kong, and WOW Summit is, we are organizing a WOW Summit as well. So let's jump straight to the questions. And the first question is to Laura. What are the most promising Web3 investment trends to watch in 2025?
You know, when I meet anyone, either it's in a conference like this, or I'm on a panel, or even doing like an interview, everyone asks me, so what do we invest in? Like, what can we do to make those 10x's, 100x's that media loves to talk about? And of course, not a financial advice. You need to do your own research. If I would know myself, I would probably be sitting somewhere in Bahamas right now, being super happy about my 100x's. But jokes aside, when it comes to narratives, when we're thinking about what is hot right now, first of all, we need to understand what does it mean, a hot narrative. A hot narrative means there is a lot of liquidity, there are a lot of retail that's coming in and pumping your bags. So having that thesis in mind, number one thing is, of course, we see stable coins. Because up to like beginning of this year, we saw this very good correlation between how much retail, especially people from the two, would buy stable coins and then use those stable coins to enter the crypto space. So they were just a gateway of buying all the different altcoins or majors. Whereas right now, there is no more correlation. That means all these stable coins, USDT, USDC, and others are being used day to day for even the simplest things, cross-border payments, remittances, different transactions. And there are a lot of businesses that are benefiting from this stablecoin usage increase. For example, yield-bearing products. I'm very passionate about investing in different DeFi products because we think, again, the same thesis. What does it mean your bags are being pumped? Someone is buying your bags. So if it's not retail, then it's institutions. And right now, if we're thinking about Wall Street and we're thinking about the returns they're getting, usually from either investing in S&P or hedge funds, 10% is the average return of S&P. If you're a hedge fund somewhere based in New York and you're making 20 or 30% a year, you're doing super well because you're beating S&P. And then we have these yield-bearing products that can even offer higher returns with relatively low risk. Yes, there is a risk of being hacked. There is a risk of this industry is just going down in flames. But realistically, it's a much lower risk compared to trading in a stock market. So that when institutions are seeing that, they're like, okay, this is something we want to get those huge return, 20, 30%, which is incredible for them. And they're pouring money into DeFi projects. We saw On the Finance launch very well. We have some other players in the space as well. So anything related to stablecoins, I would say is the #1 narrative that's going to grow next probably 6 to 9 months as well.
Thank you so much. That was pretty insightful. Charu, what do you think? How do recent technological breakthroughs shaped investors' behavior?
So a bit aligned to what you said, Laura. I think also the VCs, in a nutshell, the answer is that VCs are, I think, looking for signal and less noise. So, and where is this, where are they finding the signals? Narratives is one. And the first thing is to notice is that the crypto funding or VC funding in crypto has gone up significantly in the first half. And based on CNBC and Pantera, it went up 54% from 10 billion last year, year on year, to 16 billion now. And what's really driving this is the institutional investment, which tends to be sticky, which is not chasing, as you said, which may not be chasing 100x, but it's sticky, it's long-term commitment, and it's backed by it's like regulatory tailwinds in the US, which kind of has given floodgate moment to investments, and that's one. Then they are seeking more enterprise infrastructure grade investments. Again, that's more institutional capital going behind. And it's more driven by, as you said, narratives is around stablecoin. And there's always been a narrative with regards to investment trends. But this time, the narratives are more sticky and they're not as speculative in nature. That's one. The second thing is that the deal value has gone up, but deal volumes are moderate or have declined, and that really indicates maturity. So VCs are backing projects that have some proof points. They have shown some sort of resilience to tech. They have validation already. So the projects seeking seed funding are kind of or there's been less investment in seed funding rounds, but more in more mature and proven projects. And the third is the trend around AI and crypto convergence is emerging for two reasons. One is that blockchain gives AI a way to validate and prove. And the second is with AI agents integrating with smart wallets or smart contracts. I think that brings the whole new wave of new investment, and that could possibly drive 10x more transactions than traditional fintech rails. So I would see these three things shaping the more signal versus noise mindset in VCs.
Thank you. And speaking of this science and speaking of identification of projects, Barami, what kind of insights do you have maybe to see early projects which would disrupt Web3?
Thank you, Lisa. First thing, I truly believe it's the founders themselves and the team behind the project. Of course, you have to know why you're doing it. You have to have a very strong why, clear vision, and I would look into team who are able to strike through obstacles, challenges, and pivot through the changes that happens a lot within our space. I think second thing is what Charu mentioned about building traction and building organic community even before their first round of fundraising. I think that's very important. And one good example I love to use is Hyperliquid. I'm a big fan of Hyperliquid, and they have clearly built themselves up and showed proof of their use case, utility, filling the gap within the space where there's a real problem and providing the solution. Also having very, very organic community, no marketing from the start, and no VC backings. I think that's very important. And lastly, I would say also now, especially this year, we're seeing a lot of regulatory movement. So building and being compliance proof as well is very important. Thank you.
Thank you, Barami. I actually spoke with Laura before the panel, and she mentioned almost the same points when I asked you this question. If we are more specific, if we dig into entertainment field, NFTs, metaverse, what would attract the interest of investors right now?
Well, I mean, so Animoca Brands started our DNA is in gaming, right? So we do have of our 600 or so investments, we have about 150 in gaming itself. So Sandbox being one of the more successful ones, and we also are across different larger gaming ecosystems. So we're early investor in Sky Mavis and the likes, and then NFT collectibles and all of that. Now, if you look at sort of attention right now, it's again according to Kaito, it'll be AI, then it's DeFi. Number three is RWA, like Laura talked about stable coins as well. Number four is GameFi already, right? So people are thinking, hey, where's GameFi? GameFi is very much alive because we have 3 billion gamers in this world, and there are successful, more and more successful games of all sorts that's coming out to the market, and some of them are actually, it's very difficult to tell whether they're going after a Web2 or versus a Web3 audience. If you look at sort of like what's going on in the gaming space, is that you're investing a lot of time into investing into your community in terms of your time in there. Therefore, you would want to own a piece of that ecosystem, which is what enabling true digital asset ownership really means. So tokenizing, the assets in there and NFT is not really necessary for speculation, but it's really about being a part of your identity. Now, when we go back to the era where NFTs will be hundreds of thousands of dollars and all of that, well, there is definitely a lot of speculation at the time, but it's very normal for any space to experience that. It's just about what actually will be the use case and what sticks at the end of the day. Now, if you get really large ecosystems, today there will be Roblox, maybe Fortnite, those have large ecosystems, and coming out, with the Grand Theft Auto, next year when it comes out, these are very large communities, and we're already talking about like crypto servers that will be serving, the next GT iteration, and that sort of like infrastructure that allows the digital asset ownership ultimately will enable gamers to be more engaged, right? And whether or not you make money out of the time that you spend in the game is sort of maybe a nice to have, right? That's the way sort of you have to look at the inevitability of what digital asset ownership actually means to gamers, right? So that's why when you look at it, you say, hey, the metaverse and all of that sort of the narrative is gone, but why is it still number 4 in attention even today, right? And even NFTs themselves are coming back because ultimately the culture assets, the IPs that you tokenize have real values, not only just economic value, but emotional value, right? So if you look at, again, what do kids like today when they go for birthday gifts, right? They go for gift cards and virtual worlds, right? They want to get Roblox, right? They want to get like iTunes cards and stuff like that. That's a Web2 way of looking at things, right? But as you go forward, we'll imagine that when everyone has a participation in the gaming space, it'll be similar kinds of participation. And the young generation grows up digitally native, right? So they don't need to be taught. And this is an inevitable trend of demographics.
Thank you. I'm personally very curious about how VCs identify projects, how they select those, not only based on their portfolio mandate, but also by extra science. So Laura, please tell us more about risks. What red flags the investors should watch when picking the projects for the portfolio?
So when it comes to venture capital investment, first thing, what I always try to say is there is this myth that everyone has, that venture capital is some sort of grant or some sort of charity. We're here giving out money because we're so good at heart. Unfortunately, it's a cutthroat business. Venture capital funds are expected to bring 10x returns. It's not 10% which you can get in S&P. It's not like 30% you can get at a fund. It's those big unicorns that really change the trajectory, of someone's investment. And in order for us to find these unicorns, because first of all, let's remember a statistic that 99% of startups fail. Out of those 1% that becomes sort of successful, only a handful becomes unicorns. So we really, really, really need to do our research understanding who are the founders, what is the business they're building, and then assess, will this be that 100x investment? Will this founder make a business so great that we can get those huge multipliers? And the answer is, unfortunately, it's almost impossible to know that in the beginning, and it's only from bits and pieces of information we can try to make some sort of educational guess. So what we're looking for, first of all, we're looking at founders with experience. That means someone who has done it before. Because if you are a high school student, if you're someone who never had entrepreneurial background starting to build a business and you're going to venture capital, you're going to have a very, very hard time. I would always recommend first go to incubators. There are a lot of accelerators. I think Animoco, even you guys had an accelerator before. Like, there are a lot of great places you can go before going into venture capital. Well, yes, you have to give your equity away, but you are going to get a lot of mentorship, a lot of advice to help you out. There are a lot of advisors who can come in, angels, to really handhold you throughout the journey. So a lot of founders really get mad at investors when they say, sorry, we're not investing it, because we don't think you're going to be that 100x project. Number two, and that's kind of going back to a question of red flags, is the founders that don't really know their space and haven't done proper research. And I know it sounds very weird. How can a founder building in a project in some space don't know it? Unfortunately, I meet so many founders where I got on a call, they start to pitch, and I'm like, but there is a similar project and you're kind of forking it, or you're just adding XYZ. Did you think about it? And then I see them with their face turning white. Oh, we never learned about this project. And I'm like, while you were pitching me these 10 minutes, I did a basic Google search and found out about it. So you should really, really, really know your space and do your research and understand what you're doing. Is it innovative enough? Because, again, another very big red flag that I see is people find, for example, Hyperliquid having huge success, as was mentioned before, or they see some other products doing very well, and they try to replicate the success by just slightly making the product a bit cheaper, a bit better UX, or they're adding some other functions. That's not innovative. If there is a product that has huge advantage because they're a first move, they already have some sort of market share, and you're expecting with very little experience come in and dominate the space, you're going to have a very hard time. I'll give you an example from Web2 space. How many social media platforms tried to succeed until TikTok came and basically took over took over Instagram and Facebook? There were numerous. So the same thing in the crypto space. You have to build something super innovative. And last but not least, you need to do the research of what the fund you're pitching invest in. Like, we're primarily focused on infrastructure, on DeFi, on scalability solutions. And if you go to Gate Ventures website, you would see that. You would see that there are a majority of projects in that particular space. And then I get pitches from, let's say, gaming, even though we never did a gaming project. And I'm like, why you're pitching it to us? We're not going to invest. You're just wasting your time. Maybe it's better you go talk to Evan. I don't know, sorry, Evan, why I'm still throwing you under the bus here. And then maybe you go to Evan, and he's not the investor, we are the right investors. So you really need to do the research of the fund you're investing in, and then when you're pitching, we go back to what I said in the beginning of my answer, you need to phrase your pitch in a way that it talks about how you're going to do 100x. How will you take that 100,000, 200,000, whatever you're raising, and what is your strategy to give that 100x return? You need to sell me a vision of that 100x, because later I'll be going to my IC, investment committee, and I'll be trying to defend, because my IC is going to be asking these questions. Why do we need to invest in this project? Why do you think it's so good? Why do you think the founder is going to do well? And I need to defend these founders. So the founders need to make my job easier to then help them raise. And it's, again, it sounds counterintuitive. Unfortunately, it's not.
Thanks, Laura. I see how emotional you become when talking about.
Thank you for coming to my TED Talk.
I understand that because when the non-relevant project is knocking your door, it's really annoying, and you have a number of those projects which could actually get the investment, and they can lose this chance because of others. So it's always better to make good research. Charu, I would like to ask you, how do major blockchain ecosystems facilitate significant investments for their founders and projects?
Sure, thanks. And I think what Laura mentioned are conversations when startups are looking for significant growth and investment, right? And it's a long journey to that point, which involves all the research and all the insights that you shared. But often we see some very bright, talented, sharp founders, builders come through, example, Polkadot. I'm in Polkadot through the Polkadot Blockchain Academy or through grant programs or hackathons. And the mindset is that if I win this hackathon, I'm ready for a VC conversation, and which is often not the case. And this gap has existed in the ecosystem for a while there are many grant programs that fund the development of good code, good quality code, MVP, or not even MVP, just kind of build something and tinker with the blockchain and see if you can use this, and it just stops there. Hackathon winners, after that it stops there. So we experimented with something last year where we tagged the milestones to 2 delivery points. One was launch an MVP, which is some sort of a user journey, your end user facing journey that you can use to onboard your very first set of customers or end users or get feedback. And these are very new startups. So when they do that, they receive 30% of the grant. And the 70% of the grant is delivered when they actually launch that product with the first set of users. It doesn't matter how simple the user journey is, but it is an end-to-end user journey. So 70% of the grant is delivered at that point. The sizes are bigger than smaller grant programs, but this concept worked really well, where we received 80 applications. We approved 12 of them, and they were all able to onboard their first 100, 200 users and a lot of good quality feedback. So I think that becomes their starting point to know how to add to their pitch beyond the vision statement. And that becomes sort of their growth journey into then participating maybe in an accelerator program and start there. So I'll pause there, but it's just kind of from -1 to 0 or 0 to 1, whatever you call it.
If I can add just one thing, I think founders shouldn't glamorize being a founder and raising capital, and focusing more on just building a product and getting revenue and being self-sustainable first, and then raising capital to fuel faster growth rather than raising for the sake of raising and paying the bills.
100% agree.
All right, and speaking of obstacles, regulation can become one. So what kind of regulation trends can influence Web3 investments?
Thank you, Lisa. So I think regulation-wise, and for VCs, family offices, we definitely look for clarity and seeing where the direction is going. Just across Asia right now, with Dubai having their DMCC viral license. I'm sure Hong Kong has something called VASR, if I'm not wrong. In Thailand, we're also pushing EEC license and smart free zone as well. So it's a zone where companies, crypto companies can get registered, get support from the government and accelerators like us, have grants provided. We have incubation zone. We're also piloting crypto sandbox in Thailand as well, in Phuket. We're doing a lot of hackathons, workshops with universities. That's what I mentioned to Charu, and similarly, we're working with the top 10 universities right now, having grants program, acceleration, and installing curriculums into university like Chula, Thammasat together. So overall, the landscape I'm seeing, since we also write small to medium check sizes to projects that we support, there's, I think, 40 to 50% increase in family offices in Thailand alone to invest in crypto projects. They're seeing crypto as a new store of value, Bitcoin itself, and also diversifying. There's a lot of trends going around tokenized stocks as well. We recently had our own small Bitcoin micro strategy as well in Thailand. So overall, I think with openness in regulations and push in a lot of Asia market, it's gonna open much more and have more opportunities for us.
Thank you for turning this into a positive way. Yeah, and Evan, please tell us more about mainstream brands and how do they influence gaming Web3 space?
Well, I'll answer your question a little bit differently, right? Because the brands right now, sort of when we talk about era of 2021, 22, engaging in sort of like what you call metaverse and NFTs, is very different from how they engage today, right? It was a little bit of experimentation about extension of their brands and then sort of fizzled away as the market went away. But right now, the brands that actually make a very big difference are actually the institutional brands. So the BlackRocks of the world, Franklin Templetons of the world are entering the institutional space for Web3, which is actually putting a lot of fuel into stuff like RWA, stable coins, etc., which is transforming the industry, which in turn will, of course, will affect gaming through capital allocation and returns and all of that, right? But the trend of where we're seeing in sort of like in the regulated space of crypto right now is really the big connection point where the Web3 space will actually take off, right? Because I guess if you look at circa, since Bitcoin is invented until the ICO boom, until sort of like the metaverse DeFi summer boom, there has never been this kind of legitimacy that has been brought on by thoughtful regulations and regulators as we see today, right? So obviously, one big change is really in the U.S., which is driven by the change in SEC, which really was driven by the change in presidency, right? So as U.S. being a dominant domicile, being U.S. dollar being the dominant currency, as the country goes into the crypto space in a regulated way, it's not about Trump anymore. This is about how his administration is actually thoughtfully putting all the rails in place to ensure that the space is legitimate, right? If you look at the policy statements that the administration has been making, it's visionary, it's open, it's sort of like we want to go after the space, we want to lead in the world. What this does is that it puts pressure on every other domicile to do the same. Whereas we're in Hong Kong, whereas Hong Kong in sort of tokenized money, in stablecoin, tokenized deposit, CBDC, whipping ahead. Now Hong Kong is sort of at par, if not even a little bit behind, right? If you look at what the US is doing. So that to me is a really major trend that's happening in terms of what brands are happening. It's no longer about the Gucci's, the LVMH of the world, which is experimenting in NFTs and all of that. They're still looking into that space, but the brands that are now going to them are actually financial institution brands, and they're actually, shall I say, sovereign brands that's looking into it, right? The Temaseks of the world has always been early. They're still in it, right? They're still looking at different spaces through its venture arms and all of that, right? So those are the brands that we will look for.
Thank you. And we have a little bit time for a question to everyone. And let's think about future. What trends do you see would influence our life in 5 years, for example?
So if we're thinking about trends for the next 5 years, if everything continues as happened right now, where more and more jurisdictions approve crypto and understand it's part of everyday life, we cannot escape it. It's not the question about if crypto is going to be. The question is going to be how crypto will shape part of our everyday financial journey. I would say it's going to become very much mainstream. US is, as already Evan mentioned, accepting it. Europe is doing amazing things with MiCA as well, creating a good landscape for crypto businesses to establish and for consumers to feel safe. Because the biggest issue with crypto was, of course, no one felt safe. So, I mean, I'm in this space for almost 10 years, and I remember going to one of the first conferences, and the question would be like, how I don't know that my money is going to be safe, I'm not going to be hacked, the business is not going to go and shut down, or how I'm not going to get entangled with like Silk Road, all the dark parts of crypto. It's not a question about it anymore, and 5 years from now, it's going to be part of everyday life. The question is, how can we bring Web 2 to Web 3? And I believe that the next generation of businesses that are going to become the unicorns are going to be those that will find the rails how it's not going to be about the DeFi anymore. It's not going to be about all the different bridging, all the different financial products. It's going to be very simple UX, UI, very simple products where consumers don't even need to know that crypto or blockchain is in the background. They will just know that I'm getting payments done quick and fast and cheap. I'm getting yield that is higher than, let's say, I would invest in other financial instruments. Doing all of it, these different transactions, all these different elements without knowing it's crypto, but I'm benefiting from it. So right now I'm looking at I'm not going to name names, I'm looking at a few companies that are using blockchain, but they're not even talking about blockchain. If you see their pitch, you don't even know it's crypto because it's so deep down. They're like, our end users don't care about that. They care about beautiful UX, easy customer journey, and very good value proposition from the business to use it.
Yeah, it's like you use pager one day, and next day you use mobile phone, and you haven't noticed that because everyone is doing that, right? Charu?
No one needs to know, no one needs to understand how mobile phone works to use it.
Yeah, you just one day it happens to everyone. Okay.
I agree with that line of thinking, and we're seeing that right now in NFTs. And as Evan mentioned, that it's still there. It's not going anywhere. It's just taking NFTs is becoming, as an example, like it's becoming primitive tech. And one of the examples is our SDKs at Unique Network, which is mainly built for NFTs, was used for encryption and minting of off-chain miner work for a decentralized AI ecosystem. As a result, over 2 million NFTs were minted, and they don't look like NFTs. They're just data containers. It's just proof of off-chain work, which is encrypted into a digital asset. So what you said, it's kind of, it's so primitive tech. It's like HTTPS, which is in the background being used, and you don't know that. So I would align with that, and I think that it's right now the bigger narrative is payments and stable coins because that's driving a lot of investment right now. I do believe more use cases around digital assets will expand as AI agents start to use smart wallets and some sort of identities for them to take autonomous decisions. So I think that's where I see this tech will become more and more deeply embedded into the background.
Thank you. Marami?
Yeah, so we've came quite far from where crypto started. I've also been here since around 2017, 18, and back then when you get into your family gathering, and when you say you're doing crypto, everyone calls you, is that a new scam you're doing? So I'm always positive, and I'm very bullish in the space where it's going. I see whether it's 5, 10 years, crypto will just get more adopted, the mass will come in more. I see big bridges between tokenized real assets, of course. That's where trillions of dollars will pour in. And like what Laura mentioned, I see that as builders, keep building and the space grows, Web3 will be invisible infrastructure layer powering a lot of apps, platforms behind, and that's where products and platform has to go towards, where people don't even has to know that it's blockchain, what's NFT, what's ERC20, all those buzzwords, but they just know that it's solving some of their issues and providing value for them. And I'm quite bullish in mini apps, social files, finance. I think that's where it's bridging a lot of Web2 users onboarded to Web3. We've been working a lot with Ton ecosystem, Kaya chain, and currently with World Chain in Thailand. You'll be amazed that right now we have over 15,000 users onboarded daily on World's mini app, and we've got over 700,000 users already within 3 months. And what I'm seeing is the pattern of their behavior, although they came in because of airdrops initially, but turns out 70% of these users, which mostly are taxi drivers, day-to-day people who these kind of small $30, $50 airdrop would hugely benefit them, are actually learning to use within the apps because of the education we are providing to them. So the workshops we're holding, all the blogs, the YouTube videos, educational we're giving them, they're learning how to utilize the tokens rather than just off-ramping right away. So that's a big trend I see where we're going, and I'm really excited, for the mass adoption to keep growing year by year.
Yeah, and I think it is also exposed by word of mouth, because once you learn something, you want to share the benefits of it with others, so that's how it works. Yeah, thank you.
Well, I'll finish up by saying that I see a world where you really get financial access, right? I mean, this is ultimately what Web3 is about. You should be able to access financial services through your phone. I believe in the tokenization of everything, right? So we still have a quarter of the world's population that's unbanked because it's too expensive to serve these people. And you have, even domestic helpers in Hong Kong that are wiring money through very expensive financial intermediaries, right? In the future, you will be able to invest into worldwide, whatever, stocks, bonds, securities, and on your wallet, on your phone, with 10 Hong Kong dollars, and you'll be getting yield on an hourly basis. That's what this is promising, right? So I do believe stablecoin is just a beginning of building the infrastructure that ties in traditional finance with Web3. And ultimately, we are now operating in a financial system that is very arcane and archaic, right? It's not 24/7, it's not programmable, and it's not accessible by everyone, right? And eventually, we'll also have AI agents that are delegated onto these wallets that will make these financial decisions for you. So this is the biggest piece of democracy that we'll see. It's not your investment returns will be based on how smart you are, how well you program your agents, how well you use AI, rather than sort of like being all monopolized by very, very big players of the world. So it democratizes access, democratizes knowledge, and pushes the world forward in that way.
Thank you, Evan. And thanks for all of your insights. That was really interesting. Yeah, I hope everyone will learn daily about investments, investment opportunities, because it opens absolutely a different world. I've started actually learning about crypto thanks to Wow Summit when I started making one. And everyone was telling me, like, it takes just 6 months and you will be with us. So I'm still learning. I think there's too many things to learn, but the more I learn, the more I understand that it's amazing world, and probably in 5 years we definitely going to see ourselves in different position, but we won't notice how. So yeah, thanks everyone, and this is the final panel of the day, and yeah, thanks everyone.